What is open interest? So in today's session, we will be understanding what is actually open interest and how is it different from volumes. And yes, that is what is we are going to cover today. So let's get started with today's session. A very good evening to all of you. Welcome to another YouTube live session with me, Surjit Kakkar. Today is Wednesday, 8th of April 2020. And before we move ahead, let's get done with the formalities. So make sure you pause the video and go through the disclosure, which talks about the representation, the risk involved in the market, the risk disclosure, the risk involved in the market, and also about the copyrights. Now, before we start with the topic, which is what is open interest, let me add that I do about 3 sessions every week. Now, 2 of the sessions is where I take certain topic, like today's topic is what is open interest. And these topics I choose from the comments which I'm getting from you people. So if you want me to take certain topics, just make sure you put it in any of the videos comment section, and I'm noting down these topics slowly and steadily, one by one. I will be covering these topics. And yes, very important, the timings for these sessions is not fixed other than the Sunday session which I take. Therefore, to get notified when the session is happening, make sure you subscribe to the channel. Hit the bell icon. What I do is 10 to 15 minutes before I start with the session, I start with the countdown timer, which is going to give you a notification about 10-15 minutes well in advance. So if you are available, yes, you can join the session live. In case you're not available, at least you would know that today we had a session and later you can watch the recording. So let's get started with today's session, which is what is open interest. So what is open interest? To understand open interest, we must first understand how options and future contracts are created. Now, one thing which I'll add here is if you look at the topic says what is open interest in stock market, in futures and in options. So open interest does not apply to the stock market. It is only applicable to futures and to the options market. And as we move ahead, you'll be understanding the reason behind that. So again, to understand open interest, first we need to understand how the options market or the futures market, these contracts, they get created. So if an option or future contract exists, it must have had a buyer. For every buyer, there must also have been a seller, which means if somebody has bought, let's say, a futures contract, to buy that future contract, there had to be someone who was selling that future contract. Unless and until somebody was selling that future contract, a new contract cannot get open, right? So that is why it is I will say not, I won't say mandatory, it is impossible that you can have a new contract opening without having a seller, right? So there will always be a buyer, there will always be a seller, and only that then a new contract gets opened in the market. So this relationship between the buyer and the seller basically opens that new contract. Somebody bought and somebody sold. So if a buyer and a seller come together and initiate a new position of one contract, then open interest will increase by one contract. Should a buyer and seller both exit one contract, then what is going to happen is the open interest will decrease by one contract. And if the buyer or seller passes off their current position to a new buyer or a seller, then the open interest remains unchanged. Now, I know looking at the definition, it might be a little bit challenging to understand this, but what I'll do is in the next slide, I'll show you with an example which will make it very easy for you to understand what is open interest, and then we'll also be discussing how it is a little different from volumes. So let's assume that we have two people who are trading the market, let's say person A and person B. So A buys one future contract and B sells one future contract. So let's imagine A, he's not holding any position as of now, and B is also not holding any position as of now. So what happens is both of them, they come into an agreement, right? Which is where A buys a contract and this contract is sold by B. So what has happened? By getting into a new contract, A has created a long position and B has created a short position. So I apologize, I have a very bad handwriting, and especially when we are doing it on the screen, it becomes even more challenging. But yes, that is what happened. So let's imagine this is one contract. So what happened? A bought this contract, and like I said, if somebody is buying, somebody has to sell. So B sold this contract. So what happened? A transaction happened between A and B, because of which a new future contract was created. So now what happens to the open interest? Because a new contract has been opened, the open interest, just give me a minute. So if you look at the open interest goes up by 1. Why? Because a new contract was open, A bought and B sold. So now let's imagine we have two more people participating, C and D. And what happens? C buys 5 future contracts and D sells 5 future contracts. So again, we have C and we have D, and now we have 1, 2, 3, 4, 5 contracts. So what happened? C bought these 5 contracts, which means now C has a long position where he is holding 5 future contracts, and D sold these 5 contracts. So now what has happened? Can you see one contract opened between A and B, 5 contracts opened between C and D, but all these contracts are fresh contracts. So what is going to happen? My open interest will now increase by 5 because we already had open interest as 1. Now 5 new contracts have opened. Therefore, if you look at the open interest, now the open interest would be 6. Why? Because this is 5 plus 1, 6. Now let's assume what happens next is that A sells his 1 future contract and D buys that future contract. So can you see A was already holding a future contract, right? And D was already short. So because A has already bought, if he has to close his contract, he has to sell it. And D, because he already is holding a short position, D will have to buy to close his position. So when A sells and D buys, so what has happened? A was already holding a contract, he closed his contract, and B was already short a contract, he bought that contract. So basically both of them, they closed one contract. So because both of them, they close this one single contract, what is going to happen? This open interest, because can you see this one contract, because this is getting closed. So what is going to happen? One contract got closed. So now we have 1, 2, 3, 4. Oh, my bad. One contract got closed, so we have 1, 2, 3, 4, 5. So what is going to happen now? The open interest will reduce by 1 and the new number for the open interest will be 5. Why? Because a contract which was already open, now it was closed, right? So therefore now the open interest goes down and now the open interest is 5. So now the very first difference with open interest and volumes, you will never see volumes reducing. I mean, if a volume goes up, they never get subtracted. What is going to happen is the very next day, yes, it will again start from 0, but during any time frame, the volume is always increasing. It is never getting reduced. But in open interest, when the contracts, they start getting closed, the open interest can also start reducing, or it will definitely start reducing. Now let's move ahead, and now let's imagine that we have 2 more people participating. E buys 5 future contracts and C sells 5 future contracts. So now we have a new person who is E, who is willing to buy 5 future contracts. But when he is buying 5 future contracts, these 5 contracts, 1, 2, 3, 4, 5, which was with C, are getting forwarded to E. So can you see they are not getting into a new contract. Whatever C was holding, that is what he sold to E, which means a new contract was not open. It's just that the contract was passed from C to E. So what is going to happen? Now my open interest will not increase. Now my open interest will still remain as 0. So what is going to happen? We will still be at 5. So again, just to simplify it, whenever a new contract is getting created, the open interest increases. Whenever a pre-existing contract is getting closed, both the parties, right, then the open interest reduces. If it is a contract which was already open and it is just getting passed on from one person to another person, then the open interest is not changing. It will remain whatever it was. So that is what happens in open interest. It is basically showing you the number of open contracts as of now. So can you see, as of now we have these 5 open contracts which are with E now. Now the next thing which I'll also add here is, how is it different from volumes? Because now if you talk about volumes, when a transaction happened between A and B, my volume was 1. When a transaction happened between C and D, because the number of contracts or number of shares were 5, so the volume will increase by 5, therefore it's going to be 6. Now a transaction happens between A and D, which is again 1 contract, so the volume will go to 7. And now we have 5 contracts between E and C, therefore now the volume would be 7 plus 5, which is going to be 12. So what you can see is volume is always increasing constantly. Whatever transaction happens, a buy and sell between any buyer and seller, that is calculated as your increase in volume. But for open interest, it has to be a unique contract which is getting created for it to increase, or an already open contract to close to get it reduced by maybe 1 or whatever the quantity might be. So that's the difference between open interest and volumes. Now, how do people they use open interest? It can be used for different purposes. What I'll say is the best possible thing for which we can use open interest as we move forward. We'll just talk about it. So yes, how do people they use open interest? So open interest, the importance of open interest can be: one, open interest is a measure of flow of money into futures or options market. Increasing open interest represents new or additional money coming into the market, while decreasing open interest indicates money flowing out of the market. So can you see that can help you understand the liquidity? If you have more number of open contracts, which means people will have to close those contracts before expiry. Therefore, you might be having liquidity until expiry. But if your open interest has reduced substantially, now you understand when you are trying to close your position, maybe the spreads might be very big. So it can be used as an indication of how the liquidity is on that particular script, be that futures or be that options, right? So it can be used for liquidity assessment and to understand whether participation is happening or participation is not happening. The other way people they also use open interest is to understand the strength of the trend. So what happens is, if the open interest is increasing and also the prices are moving up, so let's imagine we are moving up, we are in an uptrend, and the open interest is also increasing. In fact, let me do it something like this, that the prices are moving up and the open interest is increasing. That is telling us maybe this trend is a strong trend, more and more participation is coming into the market as the prices are moving up. Similarly, if the prices are moving down and the open interest is increasing, similarly this downtrend can be a strong downtrend. Why? Because prices are moving down, more and more participation is coming into the market. This is how it is generally analyzed. But again, I'll add, I would never use open interest or volumes to understand whether the trend is strong or weak. The only reason I will ever use open interest or volumes is just to understand the liquidity of that particular script. Now, similarly, if the prices are moving up but the open interest is decreasing, that is basically telling us that maybe people are closing their positions, right? And more participation is not happening, new contracts are not getting opened. So this basically tells us maybe this uptrend might not sustain, and over a period of time it might start moving down. Similarly, if the downtrend is moving down and the open interest is also decreasing, again tells us not a lot of participation is coming and maybe people have already started closing their positions, where you might not expect this to continue for a long time and maybe things might change. So this is how people they use open interest, and that is how open interest is very different from volumes. Volumes basically count each and every transaction, but open interest only shows you the number of open contracts in the market at any given point of time. So yes, that was open interest. I will also be doing the same session in Hindi very soon. Now, before we end the session, let's look into the chat box. Let's see, do we have any questions? If you have some questions, I'll answer them quickly, and then we will be ending the session. All right, so let's see what do we have in the chat box. All right, a very good evening to all of you. Still we are waiting for your option session. So Shabir, right? So yes, I am working on options, but the problem is it's going to take some time. The reason is because I will have to create the complete slide deck, right? And for options, it's not as easy that it's just one slide. So it's gonna be quite a few slides. I'm working on it, but yes, once I'm done with the complete slide deck, we will be understanding and we'll also be getting into options very soon, right? It might take a month or two, but yes, I've already started working on it. Perfect. So that brings us to the end of today's session. Thank you so much for joining in. If you like the session, make sure you hit the thumbs up, share it with your friends. And yes, if you want me to take certain topics, make sure you put it in the comment section. I am, like I said, noting down all these topics which I'm getting from you people. It's just that slowly and steadily I'll be covering these topics one by one. So again, thank you so much for joining in. I'll be seeing you again very soon. Till then, stay home, stay safe, take care. Bye-bye.